Welcome, G3 investors and patrons. Well, we're going to look at week 7, week ended February 18th, and things got a lot worse during this week. The producer prices came out on Tuesday, and the data was worse than expected. And then the Fed minutes came out on Wednesday afternoon, and the market didn't like that very well. And then throughout the week, especially on Friday, Russia Ukraine tensions mounted. We're looking here at a 3-month chart of the NASDAQ Composite Index, and you can see that we had the correction that we had in January was about, from the peak here to here, was about minus 15.7%. And this week the NASDAQ dropped 1.2% on Friday, 1.8% down for the week, and month to date it's down 4.9%. So we haven't done very well in February. And technically, we have a sign from the market here. This is a technical indicator it's called the death cross or the black cross. When you see this red line here, which is the 50-day moving average, crosses under the blue line, which is the 200-day moving average. That is not a good sign. And we actually have a few ETFs that are all there, and I'll kind of go over that later. But as far as G3 investors goes, we've done really well. We're up for the week. We gained about 10 grand, a little over 10 grand, and 2.7%. Mostly 80% of that was from shorting the market. So when things go down, traders make money by shorting the market. And month to date, we're at 29,000. That's 7.6% on our invested capital, and we're crushing our S&P 500 both on a year-to-date basis. There, we're at 23.4% over 90 grand, and we're crushing the S&P and the NASDAQ. And you can see here on a year-to-date basis, 69% of our gains have come from the short side trading. You can become a member or a patron of G3 Investors by highlighting this in your browser and signing up. It only costs $20 a month. And don't forget to like and share and sign up on YouTube if you like this video. Okay, so what I'm going to look at first is I'm going to take a look at let's take a look at how we make money trading. So we're going to look at a complete set of trades that we did on February 17th. That would have been Thursday, when we traded on the SQQ. We actually, that day we traded the SDS and the TWM, which is the QQ. The SQQ is the 1 times inverse of the QQs, or the NASDAQ 100 Trust. And here we're going to look at, we use the MACD to trade this, and the little blue line is the six. We trade off of a 5-minute chart, and it's the 6 period moving average, and the red one is the 20 period, and when it crosses over, that indicates to me that it's time to buy. And of course, the green histogram here is set at 10 periods. So here's what happened. First, as the morning progressed, this is before the market opened, we had a crossover where the blue line right at the end crossed over, and it was trading around 39.50. So I set that as our, if we get an impulse, that's when I wanted to enter. And then here it is, and sure enough, we got an impulse. It opened up, and I usually give it a few 10 to 15 minutes before I decide to make a move, because the big guys are trading usually in the first hour. Okay, so sometimes we don't take a position. This day we did. We bought 1,000 shares at $39.50 per share, and it went up, and then we got stopped out of here, where you can see the blue line crossed under the red line, and we got out, and we sold our 1,000 shares, made 80 cents per share at 40.30. So we bought at 39.50, sold at 40.30, and we made some money. But we were not done for the day, because guess what happened in the afternoon? Whoops, that is not the right one. What did I do there? I don't know. That is not the right one. Well, I guess I'm not going to show you what we did later in the afternoon. I'll see if I can find it here. Okay, there's the afternoon. All right, in the afternoon, so remember we sold right here on this bar and made 80 cents a share, and then the market pulled back, and then of course it crossed over again right here, and we got back in at $40.40 a share. And this time, usually in our afternoon trades, we try to, our guide is this red line here, which is the 20 period, and we try to hold it until the end of the day. And in this case, we did. We sold at 41.91, made $1.51 a share, or $1,500 on our 1,000 shares, and so that's a 3.7% gain. So all in all, in the day, we made a little bit over $2,000 just on 2 trades. So that works out pretty nicely. Now, that's the example of the Q. I do want to take a look at the market. So whenever we're in a correction phase, we always want to look at the strength. So there isn't much to look at here, but we do have some commodity areas that are, and there we can see what it looks like. This is a strong. Now we got stopped out of this one, but we would get back in at 70 on that one. I think we got stopped out of XME too, which is metals and mining ETF, and that previous, the XLE is the energy select, that Exxon Mobil, Chevron, the big energy guys. We got stopped out of this one again, and we get back in at 50 there is where we would buy back in. I think we don't even have USO. I think got stopped out of that one too. Of course, we make money when we get stopped out, but so we'd get back into USO at $66. Now, what we did, the commodity that we did get in is silver. Not quite as strong, because the silver had a death cross. You can see the red line is below the blue line, which is the 50 days below. But coming off this bottom, it's made a nice move here, and so we took a position at 22.20. We don't have any gain on it or anything, but that's our only position. The rest of our money right now is in cash, looking to probably go short if the market keeps going down. But if the market decides to go back up, so let's look at some of the areas that the former strength. So there's the SMH, which is the semiconductor index. You can see it's trading below its 50-day and its 200-day, although we haven't had a black cross here on this one. But that's not really a good sign. But we would get in at 282 on the SMH, and that's a mover and a shaker. XLF is the banks, and I considered that a strong ETF last week, but this week it's trading below its 50-day. So I took it off my strong and put it on my watch list to get stronger, to lightly get stronger. And again, let's just look at something that is strong again, XLE, just so we can see it. You can see that we would get back in that at 70. So that is the energy sector, and it is pretty strong. Now let's look at some of the weak sisters. XLY is, whoops, sorry about that, XLY. Again, hasn't had the black cross or the death cross yet, but it's trading comfortably below its 200-day, living pretty much below its 200-day. So, but we would get in at 187 on that one. Look at XLI. This is one that we trade, but that one, look, we have a death cross or a black cross here on this one too. And again, we still would get in it at 101.50. And then retail sales. You don't go much of anywhere without retail working. Well, we've had a black cross on that one, so that's a very weak ETF, no doubt about it. Materials, I always like to look at the materials. Hasn't had the black cross yet, but again, it's not looking too strong. And I guess finally, let's look at XLB, and that's the materials sector. Again, it's getting close to a black cross, but it hasn't happened yet. Now, the defense, this is one that had a black cross before, so it is weak, but this is one that we have traded successfully because, with the tensions between Russia and Ukraine, this one's moving pretty good, but we did get stopped out this week. We would get back in. We got stopped out here. We would get back in if it got up to 107.50, and it hasn't done that yet, so it's still looking pretty weak. Well, that's about it for that. I do want to just take a quick look at the heat map. This is the 1 week performance of the S&P 500, and you can see there isn't much green on the screen. I mean, Cisco gained 6%. Their earnings came out better than expected, and that's about it. That's all I've got for this week. This is Greg Gallagher for G3 Investors. Good trading and good luck.